and welcome to Options Guide TV. My name is Brian Overby. I am the author of the Options Playbook, and I'm going to be your host for about 30 minutes here. We have a lot of earnings. It is the heart of earnings season. A lot of news this week that is going to be hitting the markets, and we'll see. We got the Fed coming up here soon. We have, unlimited amount of information this week that's going to be hitting the markets and affecting the markets. The VIX doesn't seem to care, though. The VIX is trading right at 16 at this point in time, 15.95. It's down 46 cents on the day. S&P 500 index basically flat all day, but at this point in time we're down 12. It's trading at $6,377. And we have the two huge stocks that are going to be announcing earnings this week, or tonight, I should say, Microsoft and Meta. We already looked at a trade in Microsoft that we set up based off of the earnings. We did a skip strike butterfly in Microsoft. It was okay. I would like to have gotten a little bit more of a credit, but when we did Microsoft, the skip strike butterfly, we saw that the underlying stock was trading at $512.33. And right now it's trading at $513.23. So the net credit might be actually a smidge higher. We'll look at it. Then I also want to look at just a long call spread in Microsoft. You know, one of the things about Microsoft is that it's, they don't have the exposure to the tariffs that a lot of other companies do. The company has extremely good management, and even though it trades at a little bit higher valuation, I do not mind actually getting long Microsoft outright. Also, when you look at Meta, which is going to be trading today, we're going to look at a little bit different butterfly. We're going to set up 1 by 3 by 2, which is a version of the skip strike butterfly, in that we're going to find a way to get the butterfly done for a net credit. We're going to add a little bit of risk onto our trade. And then our last trade that we're going to look at, like I promised, we're going to talk about Amazon. And I went in and looked at Amazon today for my favorite trade to do in Amazon, because they announce on Thursdays, is a skip strike butterfly. But I don't like the net credit. I don't like the setup. So I'm actually going to get long Amazon. Amazon, I do think, has the potential to blow the numbers out of the water, I guess, on the upside. Like, in other words, a strong outperform would be my rating on Amazon around earnings. The tariff news has kind of been helpful in that the can keeps getting kicked down the road. The deals don't seem to be as egregious as once thought. Also, Amazon is really, considered a low cost leader. A lot of the dollar stores are doing all right in that space. They've kind of bounced back a little bit recently. And even though Amazon, I don't think I would put in that realm, but they, a lot of people consider Amazon to be one of the low cost retailers. So those are the trades that we're going to look at, and we got to get through all of it by the end of the day today. So let's start by looking at the Microsoft trade. We were able to get it done for a net credit of 20 cents on Monday. We see Microsoft trading at 513.30. This is the August 2nd expiration. This also means that we have 2 full days after their earnings announcement. And like I mentioned, I'd rather do a stock that announces on a Thursday, and you only have 1 day for the option contracts to live on some of these strategies. But I don't mind that it's Wednesday. It's better than Tuesday, right, where you have 3 full days. So in this instance, we're looking at going about 1 standard deviation out of the money, right around where the expected move would be at. And so let's see where that, okay, let's not do that one. Let's go clear this out. Let's grab our first strike, which is the 535s. We sold then 2 of the 540s. and then we buy one of the 550s. So we're skipping the 545s and we buy one of those. Yeah, well, we're up on the trade right now. So that's 5 cents is what this is trading for right now. That means that if we flip the script, so we did this for 20 cents, 535, 540, 550. Yep, strikes are right. August 8th expiration. And right now, you could close this. It says at a net debit, which would be the opposite of this, of 5 cents. And you could actually make that 20-cent net credit at this point in time. So, yeah, not a bad trade going into earnings. If you did this quite a few times, you might just want to think about closing it out and not take the risk of the earnings at this point in time. If you are looking to put it on today, I would adjust it. We need to get more of a net credit to the account. This is August 8th. I'm surprised that vols didn't go up a little bit, that this isn't trading for a little bit more of a net credit as opposed to less, because the market did go up. Market's at 513, and we put the trade on at 512, 512.33, $512.33, 513 and 16 cents. Interesting. That is an interesting dynamic. All right, let's send this to the what if calculator. And we'll take a quick peek at it. And we'll take a quick peek at what we want the underlying market to do. If we are at that level and the market is trading right around the 513 level. Let's run back to the trading tab. Where is, so the 20 delta is about the standard one. So the expected move is going to be about 20 points. So 512 plus 20 is 532-ish. So this is where the expected move is at. The one standard deviation move is going to be right around here, right where the options grid is highlighting a one standard deviation move because of the way I have it set up. And it's set at 537.50, which is kind of goes in line with where the delta is at. That delta should be about 16. Right now it's 14.44, so it's somewhere in that range. And if we look at the what if calculator, what we're saying is if you put this trade on right now and the implied volatility came off on the way up, this green line is showing you the profit and loss graph as of today. Tomorrow, implied volatilities will come off, time decay will hit, and by Friday at the close, the profit and loss graph should start drifting towards the peak of our mountain in our skip strike butterfly. So if we land anywhere within the strikes, we're okay. If we blow the market away, the break even point on our trade, now remember it's a little bit adjusted because it's taken a 6 cent net credit, is right around 545. That's about where that break even is on our trade. Now, if you want to just get long Microsoft, now I don't, we put this on Monday, but I did say that we're going to look at doing just another trade that we just straddle the market. And I always like to bring this trade up around earnings. You can pick the underlying. You could do it on Meta. You could do it on Microsoft. You could do it on Amazon. I'm more bullish on Amazon than any of these three after the earnings announcement. So the way that I will also look at this particular trade in Amazon also. All right. But I did promise I would do this on Monday's show. So let's get to it. We're going to clear this out. We're going to still use, now in this trade, I don't mind using the August 8th expiration, which goes out 9 days. It really depends on, are you a little nervous that there might be a pullback in Microsoft if earnings are good? Because you can never tell if the marketplace is going to want to take that scenario and use it as an opportunity to sell. Now, all of these stocks have had a strong run up over the last couple of months. Microsoft, definitely, Amazon for sure. Meta has slowed down a little bit, but yeah, just real strong moves. So you're always at risk of buy the rumor, sell the news, that scenario as far as those stocks are concerned. But here we go. Stocks at 512.50. If we're looking to just get bullish and we want to basically do a 50-50 bet, what we're going to do is go equidistant in the money and equidistant out of the money. So in this scenario, we want to pay attention to the extrinsic value. If we buy the same extrinsic value as we sell, well, then we remove the implied volatility and the time premium and the time decay. So I'm going to stay in that August 1st expiration, but you'll note that August 8th, these numbers won't change much. So I'll show it to you. But if I were to do it in Microsoft, because we have 2 days remaining, I would probably do the August 1st expiration. We're going to buy the 507.50s, buy that one. Note that the extrinsic, the time value, is $7.51. And then we're going to go 2.5 points out of here. We're 5 points. We're going to go 5 points out of the money, and we're going to sell this one. Extrinsic value obviously is this equal to it because this is an out of the money option contract. And once again, you're paying $5 to make $5. But if you want to be more accurate, it's $5.10 to make $4.90. But whenever you straddle the market, this is almost always going to be the case that it's a 50-50 bet. Now, right now, we're not exactly at $512.50. We're not exactly there, so that obviously is skewing the price a little bit. But if we were right at that strike price with this short-term expiration, it would be $5 to make $5. That simple. That's the way it would work. And as you see, this is going down just a tad. We see now we're at 505. So I'm going to make that a paper trade, and we'll send this one to the what if calculator. But this is if you just want to be bullish. If you just think that the company's going to have a solid earnings report, this is one way to trade it. So if implied volatility comes in and it crushes this extrinsic value in this option contract, it's offset by the fact that you've sold just as much extrinsic value. So in that scenario, once again, they offset each other. It takes it out of the picture. It's still around. You still can't make the maximum on your trade until this option contract withers away, right? If this option contract that you've sold is fighting the one that you bought, and that it wants the market to go down, this one wants the market to go up. So bottom line is you need time premium out of this option contract if you're correct on your forecast. So that would be a reason why you do a 2-day option. Now, if we go out to the August 8th option, we're still going to be right around $5. We're going to be very close because once again, you're straddling the market and you're buying as much time premium as you're selling, and that will still be the case. Okay, so I'm going to clear this out, and I'm just going to show that to you. So we buy this one, and we sell that one, and now we're $5.18 on the trade. So a smit, what were we? We're 505, so we're we'll call it a dime more. We're paying a dime more for this option, for this straddle. Or I'm sorry, spread, this bull call spread. But once again, you're buying $9 now of extrinsic value because you have more time, but you're selling more time too on the 517. You're selling $8.10. So that difference is on a 10-point wide spread is the reason why this is trading for 518. There you go. All right. If you didn't know that, this is a very handy feature. And if I do want to get long on any stocks that I think will have a solid reaction to their earnings report, nobody ever knows 100%. This is one of my favorite strategies to do. All right, let's go in. If we have any questions, do feel free to put them in the comment box. And I do see one comment here. Let's go ahead and check that one out. Good morning. All right. I didn't know that it was that simple. Well, good morning, Kurt. I appreciate you joining. Any stop? Which one do you like the best, Kurt? Do you want Are you more bullish on Microsoft, Meta, or Amazon? Which ones do you think? Let's get into the Meta trade while we're taking that. And anybody can participate in the reindeer games. If you want to, just put something in the chat box. Now we stream live across many different platforms. So whatever platform you're on, you might want to consider joining in our conversation. So here we go. What if calculator? All right, Microsoft. Okay, so that is a trade I would do on Microsoft today. I'm sad that the skip strike butterfly actually is profitable that we put together on Wednesday, because it doesn't look as good now as it did on Monday. Okay, and I'll show you here's Amazon. Let's look at Meta. So it's kind of interesting because all the charts look very, very similar. Very similar. Meta has consolidated a little bit, but we made that run up here. This is going back a year. Let's add days to it. Let's go 1,000 here just to get the 200-day looking a little better. Strong move up, strong pullback all the way back to around the 500 level. That was right after the election. And then we come all the way back up to 5. Look at that, almost exactly right there at 745. So now we got our ducks in a row. We had the 50-day cross over the 200, which is a good thing. They call that a golden cross. I mean, I think you need to add some things beyond just simple moving averages to make this look very interesting. But we're really been in this period of consolidation. And obviously, if this can be a catalyst to make you break out to new highs, that would be an opportunity that you'd want to try to get long in Meta. I don't mind even selling the 695 short put spread. That's not bad. I don't necessarily want to do it, around earnings as much, but I would sell something where you're bringing in a lot of premium. And this is right at the 50-day moving average, 695. That's not a bad trade. All right. Now, if we check Meta, so I bring this up because here's where the most recent high is, 764. So if we're doing our strategy, and let me pull up the Meta trade. We're going to do a 2 by this. So I'm going to change it up on you a little bit. The net credit on the skip strike wasn't quite enough. So I adjusted it into a 2 by 3, 1 by 3 by 2 trade. Okay. Long butterfly. Yeah, here it is. All right, this is the one that I liked the best. I didn't like the skip. And if you want me to look at it, if you guys are participating, if you want me to look at the skip, I'd show it to you. But here's going to be the official paper trade for the day. 75 cents. Ooh, I like that. If we can get 75, that's really good. Okay, so you'll notice it's a little bit steeper of rise to run from the peak of the butterfly on down. So what we did was I went 10 points wide on the long spread, and I went 10 points wide on the short spread, but I sold 2 of them. I sold the second one to help pay for the traditional butterfly, if you will. That means that you will have a $1,000 margin requirement. I like 70. I'm gonna put it at 70. And so you have $1,000 at risk, and you're trying to make at least $70 on this trade. We are up above the 745 level, right? Which is obviously going to be a resistance level, because that's the most recent high that we've seen in Meta. So we're saying we're going to bring in a solid net credit on our account to see if Meta cannot make a new high after earnings. So if you're thinking on $1,000 requirement, the math is simple. It's a 7% uh, a possibility in one day on Meta. And as long as the stock does not blow you out of the water, right? It does not blow you out of the water, 775. So we're talking about in Meta here. This is the August. Oh, we need Meta up here. That's what we need. We sent it to the what if calculator, but it didn't bring up Meta. Why? All right, not quite sure. So we'll just do it. Okay. And so in this instance, you're talking about a 1 standard deviation move is what you need. You're also talking about a resistance level that it needs to break through. And if it does, then you just hope that you get enough time decay that if it hits 765, you have this hedge in that is this butterfly that we put into the trade. And then if that does happen, or if the market were to just blow you out of the water and go to 780, that's where your max risk is at. And we know that that risk is going to be just under $1,000. It'll be $930 in the worst case scenario. So here's where your biggest risk is if it gapped open that amount, if it gapped open double the expected move and blew the doors off of the 1 standard deviation move, then we would be nervous. And right now the marketplace is putting that probability at 10%, 9.59 based off of the delta. That's saying that there is a 10% chance at the expiration date that Meta will be trading above, at least 1 cent above the 775 strike call option. That's what delta can represent. And if you got any questions on that, I'm happy to answer it. But if you're watching Options Guy TV, I've mentioned this concept and this theme many times. As a matter of fact, if you go to Options Playbook, I have a video inside the Meet the Greek section that goes into great deal about how delta and probability relate. Okay, 1 by 3 by 2, 70 cents. Yeah, I don't mind this trade at all. Now, when I did the skip strike, it was only 20 cents, but now that moves the risk. The risk would go to the 785 before you would have your max loss. But then you cut your amount of net credit in half. The requirement would be the same, but I'd rather do it this way. I'd rather do this trade right here with this net credit based off of what we're seeing in the charts. Okay. Now, I'm not going to go, unless somebody wants me to, unless somebody jumps up, I'm not going to do the straddle trade of the long call spread in Meta. This is probably, I don't know. I'd rather do it in Amazon. So let's use the time there. Okay, so let's go back to the last what if calculator. Amazon custom spread. All right. 1 by 3 by 2. That's not the right profit and loss graph. Oh, that's because it's right here. Yeah, I didn't get the 2 in there. Okay, let's send this to the what if calculator. We're going to have to change it up. I need one more contract. Okay. There we go. Send a ticket. So in this trade on Amazon, let's go back over here, put in Amazon. And I looked at the same 1 by 3. How come that's not 2? 1 by 3 by 2. And in this instance, it's actually giving me a net debit to the account. We're going 5 points wide. A little bit lower price stock is probably the reason why. So I don't really like this trade. I don't like the way that it turned out. And the skip strike butterfly was much the same. So if I'm going to do my trade in Amazon, I'm going to clear this out, and I just want to get bullish on it. Amazon chart looks similar, and I do think that, they had their big Prime Day. They'll probably talk a little bit about that. But, here's the new high, or the most recent high, 242, 230 here. Let's zoom in on this. Still got their ducks in a row, 200 day and then 50 and then 20. That's good to have sign of a strong market, which is kind of a duh because we see what the market has done here. So I'm going to skew it a little bit. I'm not going to make it a 50-50 bet. I'm just going to get a little bit bullish. Our chart goes, where is that recent high? Let's just auto zoom. Okay. Recent high 242. So let's pretend that it can't get through that at 243, and let's sell something prior to that. So 243 is a 16 delta. 240, 250 is a 21 delta. Okay, so that's about the expected move. So let's look at 240. That's 10 points to the upside, showing the expected move at about 1230. If we bought the ask on the put and we bought the ask on the call, I guess we could do that real quick. Remember, that's the expected move, $12.30. I'm saying that if the marketplace is putting that as the over-under after earnings, you got 1 day remaining because it's going to announce on a Thursday. And in this trade, once again, I don't mind going out to August if we're just going to do the bull call spread. I'm going to pay attention to the time values, though. So I am going to buy and just in the money call option. This is going to be a lot more speculative in the trades that I do. You got to like Amazon if you're doing this trade. We're going to buy this one, and then we're selling about half of that time premium one that's standard. Yeah, we could do the 240. You're getting a good bit more for the 240 than the 242. This is where the expected move is at. So let's do this one. We're going to buy that one, sell that one. 240, $5.11 puts our break even at a couple of points over where the current stock is at. It would be $5 plus $2.27. And we got an upside of $12.50 is the width between the spreads minus the $5. So let's send this to the what if calculator. Here's my official paper trade in Amazon. I'm going to get bullish in Amazon after earnings. I do think that they will talk a little bit about Prime Day. I do think that their web services, once again, is not affected by any of the tariff talks. The tariff talks have been kicked down the road. Still don't have a deal with China at this point in time, but negotiations are active. And I think that there is an opportunity here to see what Amazon can do to the upside. We're not at an all-time high, but we do have a very strong marketplace. So here's our official paper trade. All right, that's a lot. That's a lot. And we are at time right now. Do we have any last questions before I shut it down and get ready? Because I'll be doing a lot of trading this afternoon myself. And I guess we'll move from there. All right, I don't see any questions or comments. Thanks for stopping in. My name's Brian Overby. I'll be back in the saddle again in my office. Had a little bit of issues with the internet, but with that said, we'll be back in the saddle on Friday for sure. Looking at the live screens once again on all of these trades. So Friday is going to be a very interesting day. We'll just be reviewing trades on Friday. 11 a.m. Eastern time every Monday, Wednesday, and Friday. The preferred location is the Tradier Hub, hub.tradier.com. But you can check me out on YouTube. I also stream this live, or Tradier streams it live on YouTube, and my YouTube and their YouTube. My YouTube is at Brian Overby. And you can check out and see where I'm going to be next. Thanks for stopping in, and we'll see you this Friday.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.